Okay, can you guys see the screen?
Yes.
Yeah, okay.
Well, yeah.
Yeah, so let me just see it. Okay. All right. So what I'm planning to do is these are the topics that that I researched. Stocks for monthly dividends, and there's some funds also. And I used Kiplinger.com. For many years, I've been getting a magazine called Personal Finance, but I think anyone can go to Kiplinger.com, the URL, and they're very good, in my opinion. And also, I'm going to talk a little bit about Dividend Aristocrats. Those are companies that have been paying a dividend growing a dividend actually for over 25 years. And there are some that they call kings that have been doing it for 50 years. And then I'll talk about dividend payout ratio and sustainability. Steve may have some comments on one of the companies. Stocks with history of growing dividends. I did a value line screen, and people can do that. And then I also did a stocks that are growing dividends, and talk about on the Schwab screens, I could do payout ratios. That's also important for sustainability and then we can have some open discussion, and you can interrupt anytime. Okay. Now, I don't know whether you can see this. Is this clear, or is this not big enough? Okay, your bills come monthly. Why not dividend checks? Let me go to the next one. It's a little bigger. It's the same topic, but I just made it a little bigger. According to Kiplinger, these are what they recommend as the 11 best monthly dividend stocks and funds to buy for the second half of 2021. And many of the REITs do have monthly dividends. These are the ones they're recommending. And so you can see on the line, this is the company, and this is a symbol for the company. And actually, I could go there, and I just want to get through it first, and then I can show you that I can show you a chart by just clicking on this the symbol here. And this is the price, recent price, maybe at the end of May. So the price may have changed, may have gone up, probably, or may be down a little, most likely up. The market value, 25 billion. So this is a large cap stock. Anything over 10 billion is large cap. And then the dividend yield on this realty income company is 4.1%. And it's known, according to Kiplinger, as the money dividend company. Realty Income, which is the name of the company, has made 610 conservative monthly dividend payments and has raised its dividend for 94 consecutive quarters. So that's an interesting company. Another
is there REITs mainly in the housing industry, industrial industry? What they recommend? What is it? There's a big difference.
This company, okay, let me just see. This particular company is in the real estate. They own property. I don't know more than that. Let me just see.
Single tenant realtor.
Yeah, someone could do a little. I didn't do a lot of research on the company at this point. I was just concentrating on giving everyone some ideas that they could do the research themselves. So I'm sorry I can't answer your question exactly, but if I get through this, we can go to the I can pull up a, let's see. Okay, let's see what we got here. Realty, I guess you can see all this. This is the monthly dividend company. That's its nickname. And let's see. It had initial public offering in 1994. And it has top tenants include gym chains, LA Fitness and Lifestyle Fitness, as well as movie theater chains, AMC Entertainment and Regal Cinemas.
They're into single tenant, Len.
Yeah.
Single tenant, drugstores, that kind of stuff.
Okay, but
Dollar
here
store.
are some of their major tenants: AMC, Regal, LA Fitness, Lifestyle Fitness, etc.
Well, they're not doing too well.
Okay.
I would be very careful about that one then.
Exactly.
Yeah, well-
Movies and residential, and especially office space, where I'm not sure if everyone's going to go back to work into the office other than working at their home.
Yeah,
So
well,
be
in
careful.
any case, you're right. Anything you do, you have to do your due diligence and make sure you understand what their business is and how they're making their income or earnings, and that's important. The next one is LTC Properties. They're into senior living property and nursing facilities. They're a landlord for these kinds of properties. And the recent price is $39.45. And they're I guess they're a small cap, 1.6 billion. And their dividend yield is 5.8%. I can go, to the article and that I copied into a Word document, and we can look at it more. But I thought just go through these things and then come back with and look at it more closely. So there's another REIT called Stag Industrial. Stag has light industrial warehouses. Their biggest tenant is Amazon distribution centers. And they, I think that's 40% of their income, as a matter of fact, if I recall. Their recent price is $35 and change, and 5.7 billion. So I guess they're considered a mid cap. And is that right, Mike? They're mid cap, I think.
Yeah, they would be.
It's 2 to 10. I think 2 billion to 10 mid cap.
Something.
Yeah.
Yeah.
Yeah. So, and their dividend yield is 4.1%. This is payable monthly. So, if you like to get a steady income and you're not worried about the fluctuations as such, and there may be some fluctuations, there may not, but they all survived the pandemic. Excuse me, the pandemic. Now, this is a mortgage REIT, Dynex Capital, symbol DX, and its recent price is $19.56, and it's a small cap, 604 million, and it throws off 8%, which is okay. It invests in mortgage bonds and other mortgage securities. There's a certain amount of risk, default, et cetera. And they juice their returns with a little leverage. Okay.
How is the price held up on that fund?
We could check. Let's just see.
Because with mortgage interest rates the way they are,
See if it comes up. Okay, it's $20.36. So it went up a little bit, but today it went down. This is all the stats on it. This is the chart.
Yeah, when you change the screen, we can't see that.
You
Okay.
can't see
I,
that?
No.
I would think that in this area, you would look at not just past earnings, but future earnings. And you gotta look at the price earnings ratio. And, you know, you gotta know exactly what they're invested in.
Yeah.
I'm not saying it's bad. I'm just saying, be careful.
Oh, absolutely. Okay, can everyone see the slide? I'm back to the slide.
Yeah, well, we can't, we're only gonna see the slides.
Oh, okay, all right. I thought I was sharing my screen, but maybe I'm not.
You're
Okay.
sharing the window. You're sharing the
Okay.
window that you had open.
Okay, the next one is an equity fund, equity company, Main Street Capital, symbol MAIN, and the recent price was $41.30, 2.8 billion, so it's a mid cap, and it throws off 6% in dividend yield, and it says it's the best-in-class business development company, provides equity and debt capital to smaller and middle market firms, and it pays a relatively modest monthly dividend. I don't know, 6% sounds okay, but then tops up. Oh, okay, but then tops it off with a payout twice a year with special dividends. Last year, they did not pay the special dividend during the pandemic. They did, so I don't recall what the modest payout was on the regular basis, but their total generally is about 6% apparently. Okay, another equity firm is Prospect Capital, symbol PSEC, and its recent price is $8.33, 3.2 billion, making it a mid cap, and it's throwing off a dividend of 8.6% yield, and provides financing to middle market companies. And then there's a Gladstone Capital Corporation, symbol GLAD, recent price is $10.97. It's a small cap, 369.1 million. But it throws off 7.1% in a dividend. So the comment was that while it's rather small, it's part of a much larger Gladstone family of companies with about 3 billion in assets. Then there's some closed-end funds, CEF. That's the abbreviation for closed-end fund. Double line yield opportunities fund, and it's a term fund, which is a little unusual. Most of the closed-end funds don't have a call, like some of the CDs have a call a property where they can call it at a certain time after a certain number of years. This one is the recent price is $19.68, and the symbol is DLY. And they have 1.2 billion under management, AUM, as they say. The distribution rate is 7.1%, and there's an asterisk here. The reason for the asterisk is distributions can be a combination of dividends, interest income, realized capital gains, and return of capital. Distribution rate is an annualized reflection of the most recent payout and is standard measure for closed-end funds. Management.
Is this fund selling at a discount or premium?
It's at a discount of minus 3.5%. Yeah. Now, here's the thing about the term, so-called term funds. Let me just check to see if there are any more people coming in. I guess participants. Okay, I don't see any more. All right, So what I read is that the fund is going to terminate in February of 2032. And so if it's like a bond, you buy it at a certain price, but it has a par value. And this, even though it's at a discount, if you were to hold it till February 2032, and let's say it's still selling at a discount, you would get the full price. They have to pay you back in the full price. Meanwhile, you're collecting the interest. That's what they mean by a term fund. Okay. Here's another one, Tortoise Essential Asset Income Term Fund. This is also a closed-end fund with a term limit that's going to liquidate in about 10 years. The assets under management, that's a little smaller, 260.8 million, and they have a distribution rate of 6.1%. It's selling at a 13.9% discount. So if you hold it till 2031, you'll get the full value, all right, in addition to collecting interest over the years. It has an expense ratio of 2.33%, which is a little high, actually very high. And it includes, the distribution includes 1.44% in management fees, 0.66% in other expenses. And let's see. So they take that all off, and you're still getting 6.6%. And then there's one name that's here, I'm sure most people are familiar with, Blackrock Municipal 2030 Target Term. That's another term fund, closed-end fund with a term limit. And this is selling, the symbol is BTT, and the selling recent price of $25.74. The traction for this, the selling point for this is that it's a municipal bond fund, and so the income is tax-free. It's only the assets under management is 2.9 billion. It doesn't have a very high distribution rate, 2.9%, but these days the 3% tax-free is not bad. Just depending on your tax category, and it's selling at a discount of 4.6%, and has an expense ratio of 1.56%, and this tells you what it includes. And then, whoops, I'm sorry, Vanguard Short-Term Corporate Bond Fund. This has a symbol of VCSH. I'm going to put this up on YouTube like I always do with Steve's help. And $82.83 is a recent price. It's a portfolio of short duration corporate bonds that are high quality, no junk stuff, with maturities between 1 and 5 years. And they say that the comment was it's a good candidate for the portion of your portfolio you would normally keep in cash or short-term bonds. They have assets under management, 46.5 billion, and their yield is 0.8, which is not that good, but if you're only going to put it in for a month, maybe it's okay. And the SEC yield reflects the interest earned after deducting fund expenses for the most recent 30-day period. And it's a standard measure for bonds and preferred stock funds. Okay. So as I mentioned in the beginning, Dividend Aristocrats are there's a group of 65 S&P 500 dividend stocks that have increased their cash distributions for at least 25 years in a row. And I understand that there are some that have done it for 50 years, and they call those dividend kings. I'm not reporting on that. The first company that was mentioned is Cincinnati Financial with the symbol CINF at a recent price of $119.25. I didn't go into a lot of detail with these. I'm just giving the dividend yield report, and you'll have to do your own due diligence on these, but the slides will be up on YouTube, so you can do that. And it's 2.1%. These are not meant to be monthly. Most of these fund companies report quarterly. Some may do it semi-annually. Expeditors International of Washington. I never heard of that company. EXPD, and I haven't had time to research it. A recent price of $112.97, and it throws off a dividend of 0.9%, but it's been increasing its dividend apparently for 25 years or more.
But what's strange is that as the yield is so low, if they keep on raising the dividends.
Yeah, I don't understand that. Unless that's the most recent yield, and maybe the price went up quite a bit. We could look at it more closely. I just once I get through this,
I'm just raising the question. That's all.
No, that's a good question. I was wondering about that myself, but I don't know what the answer is. There's another one that's only 0.8%. Sherwin-Williams, which is a well-known company. 3M has been around for a while. Symbol triple M sells for recent price of $201.71. Has a dividend yield of 2.9%. And then there's Stanley Black & Decker. I guess Stanley must have merged with Black & Decker, because I always thought Black & Decker was a separate company. But anyway, the symbol is SWK, sells for $212, and it has a dividend yield of 1.3%. And then Atmos Energy, I think this is one of the larger natural gas companies. That's what Atmos Energy is. ATO, it's $98.29, and an interest rate of dividend yield of 2.5%. This is one that I want to research myself. Consolidated Edison. Judy just bought a CD for 5 years at 0.85%. I was telling Steve. Inflation's at least 2%. So her purchasing power in 5 years, I don't know. I told her that she should buy something like this, and she may. $7.81, and it throws off a yield of 4.4%.
And then when you say the yield, this is the payout?
Yes,
based upon the price.
correct.
So the dividend goes up, but the prices could go down.
This is the dividend yield.
Right, but it doesn't take into consideration what the real earnings are.
Well, I'll get to the payout. One of the considerations is the payout ratio.
Right.
Based on most of the good. Some of them pay 60%. Some of them pay 20% of their. Like for a long time, Apple didn't have a dividend. People were complaining, and people are complaining about Berkshire Hathaway. Why aren't you paying a dividend? But Berkshire Hathaway is stubborn, and they're not paying. They refuse to pay a dividend. They thought there might be in the May meeting. They thought they might declare a dividend to juice their stock a bit, but that didn't happen. As long as they have the 97-year-old, what's his name? His partner, I can't remember his name.
Munger.
Yeah, Munger. Munger doesn't want to pay a dividend. He wants.
Neither does Amazon. You know, neither
Yeah.
Google.
Yeah, well, I think some of these companies may find that they're going to be subjected to some sort of increase AMD, or whatever it is.
You know, you're talking about payout ratio. Con Edison, I'm looking at their sheet right now. They pay out 90% of their, their net. 90% they give back to the stockholders. So,
Yeah,
they got 24 billion in debt and 76 million in cash. So they can get into a problem very quickly.
yeah.
I agree.
Well, some of these companies borrowed money to, like Exxon, XOM is a symbol. I think they continue to pay their dividend even though they got delisted from the Dow Jones Industrial Average, and they went through the pandemic. Now energy is gone from $30 a barrel up to almost 70, I think. And they just had an election, and some new board members who like clean energy have come on board. And so they're going to change the direction of Exxon. It's still not going out of business. So I think but anyway, that's another story. Let me finish up here. Kimberly Clark, like anything I'm talking about is food for thought, but you have to do your due diligence. KMB recent price is $132.10, and it has a dividend yield of $3.40. I'm sorry. What did I say? Kimberly Clark, 3.4%. Okay. General Dynamics, symbol GD, recent price $188.91, and it has a dividend yield of 2.5%. IBM, International Business Machines, that's a well-known. A recent price was around $143.79. I think it's a little higher. That has a very good 4.6%. Now, the people that are managing my Schwab IRA just sold IBM. I don't know why, but they did, even though it's throwing off 4.6%. Maybe they know something that I don't. Amcor, that's an AM. That's a Swiss company, and the symbol is AMCR, and it's makes packaging. I looked at it; it sort of sounded interesting, and I looked at it because I liked $11.72, and anything under $20 is sort of I look at out of curiosity. 4% is what the dividend yield is. Archer Daniels Midland, ADM, $66.59, and its dividend yield is 2.2%. Sherwin-Williams, I mentioned SHW is a symbol. It's priced at $285.59 recently, and it only has a dividend yield of 0.8%. Some of these have gone up, and that's one of the reasons why some of these dividend yields may not be high. Franklin Resources, and symbol BEN, B-E-N. And that's selling recent price is $33.08, and it's 3.4% is a dividend yield. Aflac, I belong to another investment club, and some of the people in that club like Aflac for some reason. AFL, that's $55.76, and it's throwing off a dividend yield of 2.4%. And then there's Cardinal Health, CAH, $55.62, $55.62. And it has a dividend yield of 3.5%. Okay, so we can come back and I can put the screen up on some of these if we want to do that. And some of the terms that I'm going to talk about in a minute, I'm just going to go over them. The so-called dividend payout ratio, trailing 12 months, that's what TTM is. The percentage of the primary basic earnings per share, excluding extraordinary items, paid to common stockholders in the form of cash dividends. That's Schwab's definition. And then here's some more. Dividend payout ratio. A new growth-oriented, and this is their comment, a new growth-oriented company would be expected to reinvest most of its earnings and therefore have a low or even a zero payout ratio. In other words, they won't pay a dividend. And whereas a more mature, older company, I don't think Microsoft, correct me if I'm wrong, Steve, I don't think Microsoft paid a dividend until about, what, 10 years ago, 5 years ago?
More like 15. Their big dividend was around 2005 or 6.
Oh,
And
okay.
they started it out by giving $3 a share. So all of those years that they paid no dividend, 2001, 2, 3, 4, pretty much nothing, and their
Yeah.
stock was dead. What livened them up was around 2006. They paid a one-time dividend of $3 per share, and then it started a dividend at that point. So.
Yeah, and they were stuck in the mid-20s for
forever, for 10 years.
forever. Yeah, it seemed, until the new CEO took over.
Right.
An older established company that returns a pittance to shareholders would test investors' patience and could tempt activists to intervene. So the comment was that in 2012, and after nearly 20 years since its last paid dividend, Apple began to pay a dividend when the new CEO felt the company's enormous cash flow made a 0% payout ratio difficult to justify. They never borrowed money until relatively recently, and they still have a lot of cash.
Yeah, Len, one of the things that those companies like Facebook, all of those big companies, they couldn't get their money back from foreign money. So they left it there and they borrowed, because borrowing was cheaper here to pay their dividends and pay their employees with a loan. And their money is still in Europe, and that's a problem. I'll give you an example. Microsoft, they report cash on hand is $125 billion cash, and they have 81 billion in debt. But that 125 does not include the cash on hand in Europe and Asia and the rest of the world. They can't get it back here. So that's Apple's in the same boat. Apple, Microsoft, Facebook, all of them in the same boat.
Yeah, there's been talk, from several administrations of doing something in the tax code to allow them to bring the money back, but nothing's happened yet.
Correct. Right. And the other thing you got to look at, a company like Microsoft, their revenues are tremendous as well, and their profit margins are tremendous. But they have the ability to pay a dividend if the market has a downturn. They have this cash on hand. They can continue that dividend. If you take a company that has more debt and not enough cash on hand, and their revenue slows up, they're going to cut dividends. So you got to take that into consideration.
Yeah, that's true. The sustainability of it. Right. I think we'll talk about AT&T in a minute. Anyway, the so-called payout ratio, which affects the ability to pay a dividend and the willingness to do that. The payout ratio trailing 12-month, the percentage of the primary basic earnings per share, excluding extraordinary items. I think I went over that already. And then there's a term payout ratio, and then can have a 5-year average payout ratio is calculated by first determining the annual payout ratios for each of the 5 most recent fiscal years and averaging the values. And this is the formula Okay, so I did a screen. Value Line has a screen, and I put in. I want to know company that had what my options were: a dividend growth rate, and this is and I sorted it, and the one with the best dividend growth rate was Gilead Sciences, and the Dow Chemical 19%, AbbVie 19%, and so on. And I put in also to see what the dividend growth rate is for the last year, and these are the results. And Value Line, one of the gives it rates the financial strength or safety, I guess you could interpret it that way. And I just picked, I didn't pick every category, I just picked the A's. So from A++ to A, these are the results. And the dividend yields are in the 4%, except for AT&T. And I think Steve might want to make a comment. These are the closing prices as of the 9th of June. Did you want to comment, Steve, on AT&T?
Yeah, AT&T is spinning off a piece of their business, actually two pieces of their business. And right now, it looks like they're going to cut their dividend. But their balance sheet is pretty ugly. So AT&T, I mean, they've been paying a dividend for, I don't know, 100 years or something like that. But, and I think Mike Bauer mentioned that, you know, if you're going to look for a dividend on a telephone company, you might as well, you know, look at Verizon because the balance sheet is a lot better. So AT&T, we don't know what the dividend will be on this spinoff. And you don't even know what that spinoff is going to wind up being. So AT&T, you got to kind of look at pretty carefully.
Yeah. Anything, someone once told me that anything over 6% is suspect. You have to ask yourself why they're paying so much.
Yeah, well, it's because their dividend is going to get cut.
Yeah. All right. And then I did a screen. Charles Schwab has some additional features that, such as the payout ratios. And based on that formula that I showed in the previous slide. And so these are the companies that fit the increasing or decreasing dividends year over year. And these are the results. Financial companies and health companies seem to be dominating this list. And they have market. I only picked, I did do the I didn't make a slide, but I did do a screen for mid cap and small cap, but I put in only, showing only the large caps. And then the 3-year dividend growth rates for these companies, again, are mostly financial or health companies, health related companies. And you can see, you know, they range from about 15% all the way up to 45%. And the 5-year dividend growth rate is also shown here. And the payout ratio for 5-year average, I just picked companies that pay out a little bit of their, you know, under 30% of their earnings to dividends. But you can, if you have a Schwab account, you can do the screen and you can play with it and you can do other things. Same with the Value Line. You can access Value Line at the East Brunswick Library. And you can do those kind of screens. And there is a way of getting online the Value Line also from the East Brunswick Library. Okay. Are there any questions that you don't want to ask me? Okay. Yeah, that you do want to ask me, but I can't answer. Okay, all right, no. If there, I can come back. Let me stop the share for a minute. All right, so we can go and look at different things. And I'm gonna put this up on the YouTube channel, probably in a week. And you can do your own due diligence and do some screens, play with it a little bit and get the answers that you like. But that's what I have to, I guess I only did 45 minutes. And I did do a lot of work, so, you won't hold it against me, I guess. But I'm allowing 15 minutes for questions, yes. Okay. Does anyone have any comments or suggestions? I'm always looking for, the one thing I have to say, George Fisher, who's an accountant, lives here. He's been, on occasion, helped me find speakers. I'm always looking for speakers on different topics. And if you have a topic that you'd like to hear about, please email me. And then I'll try and accommodate it.
Well, Lynn, I think one of the things, you're talking about dividend stocks. So you're talking about people that are investing for dividends in a very, in a market that we don't know where it's going. So your risk is really the downside of the capital. Forget if they can keep paying their dividends or not. Even if they pay their dividends, are you willing to hold it through a downturn? And it's what Mike keeps saying. What's the chance of it keep going up at this point in time with the debt of the United States?
Well, if you invest in a company, I guess Microsoft still throws off a small dividend.
Yeah.
I mean, that's not that company. Even if we go through a downturn and the stock goes down, it's still going to continue probably paying the dividend.
Correct. So if you're going to hold it through a downturn, it shouldn't bother you.
Yeah, I mean, I slept through 1987 and I slept through 2008,
Right.
And it didn't bother me when the market came back. And I didn't know what happened on October day in 1987. I was too busy with my career or whatever. And so, I mean, Warren Buffett and Munger tell you that they like you to hold. They hold forever. Coca-Cola has been in their portfolio for years. And I don't know whether that's good for some small cap company, but if you buy Microsoft at $9, that's you don't know what's going to happen in 30 years or something like that.
Correct.
The advertisements that I hear from Motley Fool that they are out, they have their return is 500 times as it goes up 500%. They don't tell you how many years that took to do that, but that's what I always think.
When you have 10 dead years in the middle, you know what I mean?
Yeah. Okay, well, if there are no questions, I don't know what else we can discuss, because Morley and Mike always have interesting things to say. And unfortunately, they couldn't make it today. But I'm looking for new topics and I hope that eventually in September we'll be able to meet in the theater so we can get together. We have money for refreshments sitting in the PNC Bank, and PNC Bank said my account is inactive. I said, yeah, because of COVID. We're not spending any money because there's no way in which we're going to meet in person, and therefore there's no need to buy refreshments. And so they reactivated the account.
they actually cared what you said, right?
Yeah. So anyway, I'm glad you guys showed up. I have to work on figure out why people don't show up for the meeting. They're probably playing cards in the, from what I understand, people play cards. That's their main activity here.
Well, Len, you got to consider also, you've had a year that the only thing you get is once a month an email saying there's an investment meeting. They have a lot of the newer people here, they don't even know what this is all about. So maybe what you want to do is you want to, put together a little synopsis of the club, of the group, and get it sent out a couple of times. Have Darmy send it out to all of the community so they know about it.
Yeah, I generally have written a short article for the newsletter.
Right.
And this month I messed up a bit, and I was in Virginia and I didn't write it.
Yeah, that helps.
And so Roz Blinder and Rhoda are going to be a little upset with me, but that's, because I told them I would write an article, but I didn't.
Well, if you didn't, it's not too late. You should put some sort of blurb about it.
Okay, I will do that. Plus, people are emailing. I get emails from Darmy that people want to become members of the investment club. We don't have a strict organization like the men's club or the women's club, but we do I have a list of people, and I didn't send out a separate notice to them, but I know people did get this notice. It was sent out. So if they were interested, they'd show up,
Right.
But what, Rich?
Why don't you send something to Dami for inclusion in the community feed section of the Neighbor Network website?
Okay.
And also, when you send out your notice of the meeting, in addition to simply notifying people of the meeting, so they have a description of what it does, use that as a vehicle.
Okay. The community feed of the NABR network.
Yeah, to talk to Dami about that, about setting that up. So when people look at the community feed, they can see that. I mean, how about a nice, pretty picture of Len Baskin?
Oh yeah, right. Okay. Yeah. That'll go over big.
That'll drag in a lot of people. Right?
In my bathing suit, right, Rich?
I was just going to say that.
All right. Well, look, I appreciate you guys showing up, and Patricia Reich also showed up.
It's Peter Reich using Patricia's account.
What?
That's Peter Reich using Patricia's account.
Oh, okay.
The lady you saw was his daughter.
Oh, I see.
It's either Allison or Melissa. I don't know which one it was.
Oh, okay. Yeah, there's a new, Jeffrey is new here. I just was talking with him before all you folks signed on. He moved in December, and there are a lot of new people who have moved in, apparently. Pat Valvano and myself, we've been here forever.
Right.
Mike has been here forever.
Right. At the
Steve,
beginning.
yeah, we're all old timers here. Anyway, I'm gonna call it a meeting, close the meeting unless there's something else that we need to discuss. And you could do your, I'll put this up on YouTube as soon as possible. And then you can do your due diligence from there. So have a good evening.
Bye.
Thank you.
Thanks.
Okay, thank you.